Hello, everyone, and welcome to another episode of LSEG Post-Trade Solutions Ahead of the Curve. I am John Pucciarelli. I will be your host today. With me today, again, CEO of ISDA, Scott O'Malia. Scott, welcome back to the podcast. How are you?
Very good. Thanks for having me.
Great. This is our fourth time together, so I think you're in the category of regular now.
There you go.
So thank you so much for joining us today. We have a lot to talk about. Usually when we get together, we dub this podcast, you and I, Unpacking the Agenda. And the reason why we say that is for obvious reasons. There's always a ton to talk about. And we're going to get into that in a second. But before we do that, as we're recording this podcast, we're in the throes of summer. We're just at the doorstep of it. Half a year is already done. We've had the AGM, which we're going to talk about in a second, but so far, a lot's going on. How's your year so far? How's everything going generally for ISDA and for yourself personally, et cetera?
It's good. Busy. Been very busy.
Yeah.
We started right out of the blocks in January.
Yep.
We had events in Saudi Arabia. We have netting legislation there now and legal opinions coming through. So that was in March. We were just flying through the year, and for where we got to this far is a lot of work that has already been done. We've been working with the new Trump administration. There's a lot of change going on still in Europe with their regulatory reforms. There's a lot of implementation. We've been to India. We've been all over Asia to support innovation and the use of derivatives in a safe and efficient manner.
Great. It's funny, you mentioned the Trump administration. Obviously, we have a new Trump administration. I came in January. I think one of the podcasts that we did in the past, we were talking about the new Biden administration, talking about even when Gary Gensler was becoming SEC chair. So that's how long it's been for us, and we've seen the evolution of things happening. We'll talk a little bit about geopolitical stuff in a minute. Changes at the agencies as well. But before we do that, we had another AGM. This was the 39th AGM. I get confused a little bit because I know we're celebrating the 40th anniversary of ISDA, which we'll talk about later. This is the 39th AGM in Amsterdam. Another great event. A lot to talk about. What are some of the things, from your very unique perspective as CEO of ISDA, what are some of the things that stood out to you? It could have been the content. It could have been Amsterdam. I'm always curious to hear your take on it.
Well,
and I know a lot of work goes in on it as well.
Yeah, it's an enormous amount of work. But it was a successful AGM. Great attendance, wonderful city. Amsterdam's such a great city.
Mm-hmm.
A lot of people came in before and stayed longer to enjoy that. We had great weather at the time, so it was perfect. But the content was excellent. There's a lot of discussion around geopolitical changes and what's going on. We're talking a lot also about the implementations of the work that we're doing. Obviously, Basel's a big issue that we're very focused on. U.S. Treasury clearing, the clearing mandate is a huge issue, and walk through some of the things later in this podcast, I suspect, as we get to that issue. Also emerging markets, talking about how ISDA's constantly thinking about how we make safe and efficient markets all over the world. I mentioned Saudi Arabia and India as two of the big targets for us. We've had very successful engagement there, so we'll continue on that bit of work. But the other bit was the 40th anniversary, as you mentioned. Yeah, we had that COVID year, so we actually 2020 we did not have an AGM. That's right. That's why the math doesn't work. But yes, it is this 40th anniversary, and we were able to celebrate that. We brought back some of, not brought them back. I mean, they've been part of the ecosystem for all of these years. But we had a great panel about the history of ISDA and all the way back to the very origins and beginnings. And that was a fascinating conversation and discussion. And I think a lot of people that came back, maybe haven't been back recently, really were able to share some of their perspectives. And, it's amazing that it went from just a small niche kind of financial services opportunity to what we have today is a global, super important risk.
Hundreds of trillions of dollars in notionals. And yeah, I'm a history buff on a lot of things. I love history, and this is no different to me. Obviously, it's close and near and dear to both of our hearts. But yeah, just to see that and to mark the time and seeing the folks that were there in the beginning was great for me too.
Yeah.
And yeah, to see where it's all come. I think it's important for other people, like especially newer folks coming into the derivatives market, you know, learning about ISDA for the first time. It's really important to let them know like where it all started. You know, I think it's great, and we're going to talk about future leaders too. We got a lot to talk about in that program that ISDA does as well. But one of the other things that came out of the AGM was SIMM 2.7.
2412.
24, yeah, 24
Version 2412.
And just to give people a perspective on that, and so obviously from an LSEG solutions, post-trade solutions perspective, it's core to our business. You know, we have initial margin exposure manager where we are the standard for reconciling sensitivity. So we're always working directly with you guys, with your staff, to make sure that we're on top of things. We pass the unit tests, et cetera. But, you know, I wanted to talk about it with you because there's something, you know, it's something new and different, right? There's semi-annual recalibration that's happening now. And there's also something going on in the EU as far as the approval process. And ISDA has put out some really great information, and it's all free on the website to help firms deal with that. So you want to just give us a little bit of background on that, and you know what your perspective is on that as well?
Sure.
Yeah.
As you noted, we're SIMM 2.7 dash 2412.
Yep.
So this is our first biannual recalibration.
Mm-hmm.
And we've worked with the regulators over 2024 to implement and get to this spot. So we will do a recalibration twice this year to support and make sure that SIMM is fit for purpose in the environment and used all over the world. It has become, you know, a great solution that both regulators and the market can benefit from because it does have regulatory oversight and approval. So in all of the jurisdictions that it's provided, people have a way to, you know, responsibly and regulatory appropriately get their arms around this thing and work through this. So, you know, we've added a couple of new jurisdictions this year. We're working towards China. We're working towards India.
Yep.
They have rules drafted today. South Africa, Mexico are the new ones coming through.
Yeah.
So we have to continue to support all of the jurisdictions that have it today, as well as expand it and make it relevant going forward. You mentioned, you know, the role that we play versus the role that you play. It's super important. We can set the standard and then hand it off for industry implementation. And, you know, the fact that you are out there supporting your customers to provide this service is fantastic. So our job is to make it current, relevant, regulatory approved, save everybody the hassle of doing it themselves in all the jurisdictions. I think we're over 12 jurisdictions today, and make their job a lot easier.
Yeah. I mean, it's something new, right? So anytime there's something different, everybody's like, well, how are we gonna deal with this?
Yeah.
And,
I mean, you mentioned the European.
yes.
There's a bunch of there's a requirement that you have to get your model approved in the jurisdiction that you're using it in Europe, and that's right.
Yeah.
That's true. There's a deadline of July 12th, and we're coming up against that. It's really a notice to the regulator. And if you're a significant entity, you have to know the ECB as well.
The larger banks, right?
Yeah, exactly. But just to make sure that you file your notice with it, you can find the rest of the material on our website, what you have to do and to whom you have to do it.
Yeah.
And that's the best pathway forward. I don't think that they're particularly doing anything with the material yet,
Right.
but they will going forward.
Yeah, I think, you know, there was a lot of questions from my perspective on the LSEG side, clients asking, you know, what do we have to do? You know, we were giving our perspective and working to, you know, closely with ISDA on what are the requirements, because, you know, we have this, you know, the EBA being like the central approval, but that's kind of down the road a little bit. And it was like, well, do we go to the EBA? What do we have to do? And ISDA came out in very timely fashion with, this is what you're supposed to do, meaning firms, not the larger banks, but all the other smaller entities go to their competent authorities, right?
Yep, correct.
And that was great because it wasn't clear. Like the regulators didn't make it really that clear. ISDA came in, spoke to everyone, got the information out, put together a really nice, what I think was a nice application approval template. And, you know, we sent that around to all our clients, and they were very happy.
Good.
So when they're happy, we're happy.
Yeah, exactly. But we do work with the regulators to clarify that issue because it wasn't clear to us. We engage with them; they've been very forthcoming. We appreciate that, and then we're able to share that with the industry.
Yeah, that was great, and we're working towards the July 12th deadline. I think all the unit tests are probably in at this point for us anyway. I'm not going to talk about my competitors. Maybe they're later than me. We'll see what happens. But that was this is a big deal because of the semi-annual. And I'm sure it's all going to go fine. And then we have one in December, right? That's the next one. So that was great. I think the other things that were coming up in the AGM was treasury, right? Treasury clearing, repo clearing. And I know that there's other, trade associations that are kind of looking at this as well. But, ISDA is kind of at the forefront of a lot of the stuff. Some of it's adjacent to the derivatives business, but some is very direct, like repo to the derivatives business. And that's why ISDA's very involved in this. From my perspective, a lot of it that I look at this as like a workflow solution, right? There's going to be a lot more volume. There's going to be a lot more collateral moving around especially for repo. And then, we have to deal with this. But in terms of, and we have the deadlines, we can let people know about the deadlines. But in terms of the role of ISDA and how, from your perspective, what ISDA's role is in the treasury and repo clearing that's coming in December of 2026 and then June of 2027, right? I think I got those dates right. We talked about this earlier. Seems like a far away, but it's never. You never have enough time for anything, really.
And keep in mind, this is already a year delay,
right?
Which we're grateful for. We advocated that with the SEC.
Yep.
They recognize the workload that has ahead of us and what has to be done. So they were generous. They gave us a 1 year delay. So you're right. End of 26 for cash, mid 27 for repo.
Right.
It is an all hands on deck working with FIA and SIFMA. SIFMA is holding the pen right now in the legal documentation. That's obviously the first part and essential to get good documentation. We've got done with documentation, which traded with your dealer, cleared with your dealer. Also working on done away documentation, and that's forthcoming. We also have 3 clearing houses that will be offering services in this area, which is really going to be interesting, I think, from a commercial standpoint. We'll see how this shakes out. So the incumbent DTCC FIC has its services, and they have roughly a dozen clearing models for members and market participants to consider. CME has a partnership and an independent proposal that works with FIC. And then ICE has its rule book filed with the SEC. It has not been published for comment yet, so we're waiting on that. So you digest the rule books, you understand what the clearing models look like, and think about the commercial opportunity here. You mentioned the operational challenges. That's significant. Once we figure out what the clearing models are going to be and what the clients and the dealers are going to agree in terms of that documentation, then it's about implementation. And that's not insignificant. This is a new build for many people and some new clearing structures. So pay attention. ISDA publishes all the clearing models that we've seen thus far on our website. So if you're trying to get your head around what's possible or what's available, certainly check the website out. We do a summary of that, and then you can figure out your commercial, what's in your best commercial interest. The next bit of this is to make sure that treasury clearing remains efficient. And this goes to the capital treatment. And this is where ISDA's putting a lot of time and effort. Back in March of last year, actually, we put forward a letter, this is 2024, asking the Treasury the U.S. Treasury and the Fed to consider offering relief under the SLR for repo, right? Removing repo from the denominator of SLR to make it more efficient. It's a low-risk trade. It's a high-volume trade, and it's consistent with the relief that was provided in the dash for cash in the previous Trump administration. So this is not unfamiliar, right? This happened, but it was kind of done under emergency circumstances. We think that should be made permanent and would love to see that made permanent. And we've been in conversation why we want to have repo out of for on-balance sheet transactions to make sure that we have enough liquidity. The other element to this is cross-product netting. Now, when you have futures, cash and repo in one client netting set, there's a huge opportunity there, right? This is kind of the mother of all netting sets, which is fantastic.
Yep.
Provides a client a lot of efficiency. What we understood, though, when we looked at the capital treatment is under the standardized approach or SACCR, repo is not part of that netting set. So we have recommended to the Fed that they modify that and put repo as part of that netting set. So then you have the client and the dealer treatment consistent. And that's really important to offering, again, it's a dealer-dominated market, making sure that we have good, efficient markets, and you're not creating a capital treatment that's inconsistent with the netting treatment.
And have you heard from the Fed on this yet, or is it something that
we've been in dialogue, and we've been urging? And in fact, I was, recently in Washington advocating on this to make sure that we get that proposal out. Now, endgame is also the other element. So Basel endgame
up too, because it's, you mentioned capital every time anyone says capital, we're always like, well, what's going on with endgame? So
endgame has, in the last version that we saw now in the Biden administration, it had punitive capital treatment for clearing, which is completely inconsistent with where we need to be with, all clearing, but particularly with treasury clearing. So we advocated against both the GSIB surcharge and the endgame client clearing requirements that boosted capital.
Right. You want more clearing, but then you make it punitive.
Yeah. Right. It's completely inconsistent. So we advocated on that. The last proposal, at least by a speech by Michael Barr, was that they were going to fix that. It had an 80% increase in RWA, which is crazy.
It's huge.
So we think we're in a good spot, but we're going to continue to make sure that the Basel endgame, whatever they call it under this administration, recognizes clearing benefits, the opportunity, and that it gets favorable capital treatment.
That's the gold plating is kind of,
it's got to go.
It's got to
right.
go,
We got to incentivize clearing. Or at least have a risk appropriate treatment of clearing that is not gold plating. So those three things: SLR, cross product netting, and then the overall endgame proposal.
And again, people watch this. I'm not going to hold you to any time frames, but I know, UK, EU, it's kind of a waiting game to see what the US does. I know, generally the Trump administration seems to be, deregulation, less regulation, sound regulation. I don't know how you want to call it. It sounds like it'll probably happen in that vein. But do we have any indication of when we think we might see this, or not yet?
We don't have a specific date or time. Chair Powell has said they're going to work towards that. Mickey Bowman, vice chair for supervision, is now in her role. She's responsible for taking this on. We expect that they are working quite aggressively to implement this. We'll just have to wait and see. We don't know what the timetable is, and we don't know what the overall proposal will be, but we'll be ready to comment and hopefully on a new proposal. And I kind of want to go back, and the timetable does matter. We're kind of recording this on end of June, and the Fed's about to have an open meeting on leverage ratio. So we're pleased that they're going to be addressing that. We think that's really important for deep liquid treasury markets. We've advocated also that they address the issue of cross-product netting as a separate rule making as well. They could put it on, a new Basel proposal, endgame, but that implementation, as you kind of teased, could be too late to support the treasury clearing. So we've also advocated that be an independent rulemaking to address that standardized approach of SACCR to get that fixed. So you can everybody gets full advantage of the cross-product netting. We'll just have to see how they phase this. We'll be commenting. We'll be soliciting views from the market. So it'll be, I suspect it just like a busy first half of the year, it'll be a busy half of the second half. And
it'll probably all come in 1 month at the end.
As it does.
As it always does. That's great, Scott. That's really interesting. And, ISDA, as always, finger on the pulse and right in the middle of it. So we'll wait and see. Obviously, from an LSEG perspective, I can't really comment on, you mentioned a lot of other clearinghouses, but not us. Obviously, we are the London clearinghouse. So, we do clear Treasury futures, but, we'll see. We'll see if there's a fourth entrance at some point. but that's neither here
Is that
nor there.
breaking news, John?
No, it's not. I'm not breaking any news. Not breaking any news. Anyway, well, that's good. It's good to know. I'm glad we've laid that out. I think it's really important to keep on top of this. For our capital, optimization business, it's really important, but it's important for everyone to get clear direction, especially from a global perspective, right? It would be nice to have the globe kind of walking in the same direction.
Well, let's not. I mean, this is a really important market.
Yeah.
Right. The treasury market, super important. It's a global market.
Mhm.
So this is a global implementation. It funds, the repo market funds so much of our non-cleared margin today.
Yep.
Right. 1.5 trillion in non-cleared margin, according to the latest
Not
ISDA survey.
insignificant.
No. So we want to make sure that market
It has to
stays
be. It has to
liquid,
be.
efficient, cost effective,
And this
to
is
make
the whole
sure,
point, right?
yeah, to make sure that we can fund the margining, the clearing, everything else that goes with it, so that our market remains safe and efficient.
Yeah.
That's that's why we exist.
That's right. That's right. Well, thank you for that. I'm going to shift gears a little bit and kind of talk a little bit. We'll go you mentioned collateral, so we're actually segueing into it. Something that ISDA has been doing for a little while, and I think it's a great effort because, as younger people are getting into this market and working in the derivatives industry, it's important to engage them. It's important that that we hear from them,
Right.
New minds, new ways of thinking about things. ISDA Future Leaders in Derivatives program. You've had a few cohorts already.
Yep. Four
already.
We've completed 4.
We were part of this last one, the collateral efficiency white paper, which I think was great and was laid out at the AGM as well. Some really good ideas in there. I think, like, for me, the overall themes were around optimization, liquidity, especially during stress events. We've seen a bunch of those recently. Hopefully, I'm sure we're going to see more of those. But how collateral can move and what types of collateral, high quality liquid assets. And a lot of that, I felt like the paper was really super focused in on that. There was a lot of other things too around new technologies and infrastructure and stuff like that. But to me, that was kind of what undergird the paper, which I think is important to talk about. And I think a lot of things will probably come off the back of that paper. And I know ISDA's working on that already.
Yeah.
For you, how important is this program for you? And, what are some of the things that kind of came out of this paper? I know we're going to have another one next year. And I don't know if we can talk about that yet. But as far as this one goes, were you proud of the folks in the cohort? I know you were hands-on because I got reports myself saying that we had to present to Scott. I'm like, okay, Scott's, as always, hands-on a lot of things, which made, that was great. I was very happy to hear that. But again, from your perspective, this paper, this program, like, can you just give me some of your thoughts on it?
Yeah, well, the program is, as you noted, our opportunity to kind of recruit and find the best and brightest in the industry that is maybe not engaged in the regular dialogue on either the working groups or in our conferences. So we really want to build the future, and it appropriately named the future leaders. They will be taking over for us, and so we want to make sure that they're well prepared and engaged. So they are extraordinarily bright, hardworking people with a lot of strong professional backgrounds, right? So, and we bring them from all geographies within the within the ISDA world, and to make sure that we have kind of a complete set. We always task them with an assignment at the beginning of the year. This year was collateral. We've done AI, we've done commodities and climate and sustainability in the past, and they write a report. They all have to work together, and they do a fantastic job. And we also support them by professional training as well. We get coaches for, speech making and other training to make sure that they're just really well-rounded professionals going forward. And then we have an alumni group that we kind of have to support as well. And so we build this real strong network, which we hope they benefit professionally, and certainly we can recruit that. We want to engage them in our conferences going forward. They bring a slightly different perspective.
Yeah.
They're kind of like no holds barred, right? And that's this white paper. Like
that's what I love most about it. We have a friend flying around.
That's
what I love. That's what I love about it. It is no holds barred. It's everyone kind of just getting around the table and throwing ideas out and the best ones kind of win.
Right. Well, we had 16 recommendations, I think, out of this out of this paper, and some of these proposals kind of had, kind of were considered previously, but they're like, no, these are really important. We should go back to these things. And just because it's not current industry practice doesn't mean that it doesn't have some value.
Thinking out of the box.
Explored AI, talking about diverse collateral, more diverse collateral, how you would get that, how you think about tokenization. So really doing a lot of innovative things that we can use as we think about the future, and we certainly have them present and share that. So we 100% support that. We've seen their paper, we've engaged with them on it, and we're behind them 110%.
Yeah. Well, I was really proud that we were part of it. And I love the result, and I think there's a lot of great ideas. Tokenization is one thing that we're going to continue to hear. As digital assets become more of a reality, which they're already being used in a lot of circumstances, this is definitely going to be at the forefront along with everything else. And I think, again, we always talk about safe, efficient markets. This is part of that, right?
Yeah.
And how do we make it better? And then how do the young people teach old people like me? Maybe I'm thinking about it wrong. Maybe you need to think about it this way.
Yeah.
So I love that. I love the transparency and the open and honest process that is. So well done there, Scott. Well done, ISDA, and well done to the cohort.
Yeah,
great.
They worked hard.
Yeah, they did. All right, I'm going to switch gears a little bit now into kind of the market's regulatory changes. I mentioned earlier before, we've talked about changes from a Biden administration to a Trump administration in terms of what's new in the SEC, at the CFTC. Now, I know that we had a couple of resignations recently. Summer had left. There's a couple of new ones, and I think Brian is still on the Hill, maybe. I don't know. You probably know better than me. I'm not in government relations. I have a great team at LSEG that does this. I keep in touch with them as much as I can, but I'm not in real time. But maybe you could just give us a perspective on, maybe, you were a former CFTC commissioner. What's going on at those agencies? Maybe some of the early focus when Brian Quintenz becomes the next chair. What's his agenda? Can you share anything? And you don't have to tell us anything, obviously, that isn't public, but, maybe you've heard something recently that and you could share. It'd be helpful for folks. But from your very unique chair, what's your perspective on those agencies now?
The question of what's new, it's certainly the leadership.
Yeah.
So Paul Atkins has been sworn as the new chair of the SEC. Yep. Used to be a former commissioner. His term ended in 2008 previously, but he's also joined by two of his colleagues, Hester Peirce and Mark Ueda, also well-experienced individuals. So they're kind of off and running, and they're doing a great job. Recently for the ISDA world, and they've delayed some rulemaking about data reporting. So the swap dealer data reporting requirements, which were due to expire using substitute compliance at the end of this year, they kicked off for 4 years. So I think you were beginning to see their agenda coming through. It's still early days, but I think they're looking very carefully at where they can make reforms to existing rules to make markets stronger, markets better, and kind of get rid of regulation that doesn't make sense.
Right.
It's not to say that wholesale they're going to cut the regulatory environment. I don't worry about that at all, actually. And in fact, they were very clear that the Treasury clearing mandate is going forward.
Right.
We spent time.
I was going to ask you too. Like, people ask us, "Is this going to change again?" Because we got a delay, and you're saying
no. They were like that.
Pretty clear.
That was your first and only delay, is what we heard.
Okay.
And so it's get on with it.
Yeah.
As you mentioned, Brian is he's going through the nominations process. He had a very good hearing on the Senate. I think I'm optimistic that his nomination, and he'll be able to get into the CFTC this summer.
Okay.
Maybe as early as before the July 4th break, which would be fantastic.
That would be great.
And I think, Brian's a former CFTC commissioner. He replaced me.
Yep.
He hasn't disclosed his agenda wisely before he gets the job. So, but I'm sure he has some ideas of where he can.
Crypto.
He's thinking about some reforms.
Yeah.
Crypto is consuming Washington right now. The House House and Senate have passed their stablecoin legislation. The House committees passed their market structure for crypto. So it's full on, and the conversation in Washington right now is all about crypto right now in the market structure issue. So that will continue to play through the summer and probably early fall. But I do think both the House and the Senate will pass respective bills that will create a new market structure and regulatory clarity, which is important. I think that's an area where ISDA has to contribute in certain areas around the definitions of crypto, making sure that we have good rule of law and clarity around certain definitions for derivatives in crypto. We'll work on kind of the custody treatment of this as well to make sure that that's clear and bankruptcy's well-defined. I think that's our role. We don't have to get involved in everything. We don't have to solve everything. But we want to make sure that we have a good level playing field that recognizes and clarifies the regulatory treatment of crypto.
Well, thanks for that, Scott. And now for kind of our last thing, and I always like to talk about, what's going on in the world. Obviously, there's a ton of volatility from the beginning of the year with Trump's tariffs. We have a lot of geopolitical things going on. I don't know if I want to use the word risk, or, we still have Russia, Ukraine, we have Israel, Iran right now, and we're getting involved, and it all has an effect on the markets, and it affects our derivatives markets. I say ours because we're in it. Any perspectives on that in terms of what does it mean for the derivatives markets, if at all, and really how, what role do you think we play when things are kind of going in this direction and in this environment?
Well, first of all, as part of our 40th anniversary, we did release the value of derivatives report and kind of a stock take as to who uses them and why. And the reality is that thousands of firms worldwide across all jurisdictions are using derivatives. Well over 80% of the firms that we surveyed use derivatives to manage risk. And it is a global market, right? The derivatives market, but also managing risk and investment across the globe. I kind of have the opportunity and the benefit to crisscross the globe to talk to policymakers all around the world about the value of derivatives and the importance to their economies, and why risk management around interest rate risk or equity markets, making sure you have diversity, both at a cleared and a non-cleared space, to give, participants a way to manage their risk and take a view on the markets. As you pointed, yes, geopolitical concerns all over the place. You have an interest rate environment right now that is changing quite a bit with, in most countries lowering interest rate, but the interest rate on the curve is reflecting kind of a short-term geopolitical issue, and then a long-term on financial stability in the question of, where are economies, where's the U.S. going to be in terms of its debt, et cetera. So, managing that curve and helping firms manage risk all over the world, whether FX, equity, credit, et cetera, matters, right? You've seen with a less strong economy or a weakening economy, you think about some of the CDS issues that you want to make sure you manage the counterparty risk and the threat that the bonds could default. So all of these things are at play, bringing much more attention and focus to our market. So we believe now more than ever derivatives are relevant and important, and that the alternative to not managing your risk is, taking on more risk. So, we want to make sure that we talk to policymakers around this, and maybe dispel some myths about the market and some legacy concerns about bringing risk into a market and the role derivatives have. So we want to dispel that as well as highlight the importance of that, and then how we think about the policy implementation is connected. So capital treatment, market structure issues on liquidity. We've gone through a whole regulatory change, right? It was all about managing counterparty risk. Now we're really focusing a lot more on liquidity risk and making sure episodic markets or fragile markets don't spiral out of control. We've seen some of these dash for cash, LDI crisis. It's really a full-time job. Yeah, sure is. We're active on it, and it's an interesting and rewarding job because it is developing solutions to help the market. We talked about SIMM earlier on the podcast that how do firms manage their counterparty risk?
Mhm.
How do they get a model that's approved by regulators and supported and used and is cost effective?
Mhm. Yeah.
Something ISDA can do, making sure that capital treatment is well defined and risk appropriate. Lots of things that we're working on right now to make sure that derivatives are safe and efficient, as the logo says.
Yeah, absolutely. Well, I'm always glad, and again, I come at it very biased. People who are listening to this, I worked with you, Scott. You were my boss, my colleague, for many years. So ISDA plays a big role in our business. They're near and dear to my heart, and I'm glad that you're there and do all the great things that you just laid out. And there's even a lot more than what we were talking about today. But that's great. Thank you for that roundup. Thank you for coming. I think we're done. I mean, I don't know if, I know we always, I'm always used to having any other business section of all of my agendas. Is there anything that you want to plug for ISDA? I know there's a lot of other things going on. Anything you want to plug before we go?
We're in a very important time now in terms of implementing the Notices Hub and a couple of other solutions. So the Notices Hub is to manage counterparty risk, and certainly in the event of a default, it's just a better way of executing default and terminations between counterparties. We learned after Lehman, after the dash for cash and COVID crisis, and then after the Russia sanctions, the ISDA master agreement requires delivery physically. And when Lehman had moved offices and they defaulted to the entire industry, right? Yeah. So we had to deliver those notices.
I remember that.
Dash for cash, right? Delivering to empty offices, and then Russia delivering to a country that did not want to be delivered to. So each of these have their own problems, but we have learned from this. So we've created, working with S&P, a technology solution that counterparties will deliver to the Notice Hub, right, the central hub, and then emails will go out, or text, or whatever form you want to communicate that. That is a absolute locked in, this is when it happened, auditable, transparent, and very efficient. You're not worried about did the messenger get to the building? Did they deliver it to the correct building? Because updating the documentation isn't always a priority. And so you find legacy documents could have the wrong address or the wrong individual identified in that. Yep. So we want to make sure that we update that consistently and accurately on a regular basis. So we will have a technology solution to do that. Now, we're also supporting this with an ISDA protocol. So right now, from June 11th until our go live on July 15th, we're asking the industry to sign up on a pre-adherence period to a protocol to adjust all of your documentation. So by doing that, counterparties can agree to this. We'll publish that. Then you can begin to use the Notices Hub when we go live on July 15th. We're also, as this is a global market, supporting that with opinions, netting opinion, or opinions to say that this delivery mechanism will work in your jurisdiction. Yeah. We have 20 priority jurisdictions of the largest, most relevant jurisdictions right now. Those will be ready by go live on July 15th. Okay. And then we're going to finish out the rest of the protocols, or the rest of the opinions, through the end of the year. So we will have a much better automated solution. It's already the same service that the counterparty manager that's already connecting to your services today. So this is not a new interconnect. It is just an expanded service of what's being offered. So it makes obviously interconnection and onboarding much easier. So we were asking the industry to join up, come onto this platform to support it, so you have a much more accurate and timely way of delivering termination notices.
Yeah. It made sense. And, obviously you mentioned S&P, they're a competitor of ours in a couple of ways, but you already had some established, especially from the protocol perspective. So it made sense to just extend that. So that totally made sense. It goes hand in hand. And it makes sense. There's no reason to re-engineer anything else. You already had the pipes and everything else plugged in. But yeah, I think that's, it was a good idea, and I'm glad that it's coming to fruition, and it sounds like it's ready to go.
Yeah, and we've had good market uptake. Many firms understand that this is the right solution at the right time, and it is the future. In the future, we do think we can expand this to other documents, other services, et cetera. But we're going to start with the basics, and we have to deliver that. We do that well, then we earn the right to expand the solutions going forward. Should also point out that ISDA is also doing a lot on the digital reg reporting using the common domain model. I think we're having a lot of success there. More and more firms are coming on to that. More and more firms are developing POCs to figure out how they onboard to get a more accurate reporting of across multiple jurisdictions. So we've had JP Morgan as a big supporter of this. BNP, Pictet has also been on board. We've got many other firms joining in that testing phase, and they're going to go live with the new implementations.
Great.
So ISDA will continue to support this. Every time regulators change the rules and update the rules, we'll be there to push out new solutions so you can accurately report. Should point out that over the past decade, we pulled these numbers. $285 million was paid in penalties and fines by the industry in just the past decade in the U.S., EU, and UK. We want to bring that number to zero. And we do have some important implementations. Hong Kong, Canada went live this year. We have MiFID in Europe again coming forward. So there's more to be done there.
Great. Those are big numbers. Great, Scott. Thank you for that. And obviously, from an LSEG solutions perspective, we're involved in MiFID, MiFIR reg reporting as well. So CDM is always something that we're looking at and implementing as well. So thank you for that. Listen, this was great. I know we had a little fly running around. Hopefully that doesn't distract our listeners, but we apologize for that. But this was a great conversation. Thank you so much again for joining us today, spending time with us. It's always great to see you, and hopefully you come back again.
Oh, I'll be back.
Okay.
You invite, I'll show up. Thank you very much for having us.
Thank you, Scott. Thank you. Thank you again for joining us on our podcast. I had a great conversation with Scott. I hope you enjoyed it. I know I did. You can find us on all of your streaming services, Spotify, YouTube, and on lseg.com. Thanks again for joining us, and we'll see you again soon. Bye.